Hello there. This week, we investigate the conflict between economic policy and natural forces. Fiat currency systems never last, and when they start to go off the rails, they need ever more managing, so the tension rises. In order to be successful, it is key to understand both forces. Today, I highlight 4 points and 3 videos I've put in the blog. Point one is gold. This is an area where there's clearly tension. The central banks for almost 10 years now have been selling treasuries and buying gold. This is a huge trend, and it doesn't look like it's anywhere near over. So while that is going on and gold is going to all-time highs, we are surprisingly seeing a decline in participation in the biggest gold ETF in the US. So we're seeing the shares decline. So investors are actually in opposition to what is happening because of the central bank buying. So liquidity also in the last week has or is about to explode because we've seen an aggressive cut from the Fed. And then this week we got a very aggressive boost from China. So they're going to make sure that they grow 5% in short order. So that will be a lot more debt and liquidity coming into the market. So no wonder the stock market is making new highs. It's really about the huge boost from the two biggest central banks in the world, the US and China. No surprise. The stock market is really being driven by the force of money, debt, and liquidity. And the question is, do fundamentals actually support it? Is it lasting, or should we just be trading? And what we've seen is that there's no reconciliation with the economics. Consumer confidence really collapsed on the last reading, and consumer discretionary stocks have very poor fundamentals. They're not going down because there's so much liquidity. In general, they're not going down. But retail sales per capita have been declining for 3 years now, and in real terms. They're not reported in real terms, they're reported in nominal terms, and so everybody says, hey, great, it's really good, but you should look at it in real terms, and that's the real story. So not only is the consumer stocks not reconciling with the stock market, but also the area where everyone says is the real growth hope is AI stocks. And we've now seen AI stocks, their expected earnings are now less than the S&P 500's expected earnings. So that has now more or less come out of being reflected as a real growth hope. So we're looking for where is the growth coming from. Then there are 3 great videos in the blog which speak to these issues. The great Greg Weldon has gone through his monthly reallocation, and it's a fascinating video because he's trying to reconcile all these contradictions between economic value and the latest data and the trend of data and all-time highs. And as ever, he's entertaining and incredibly informative. It's a good video to really get into market dynamics. And then going completely the other way is another wonderful video by Russell Napier, who is a great economic historian. And you'll find that this is surprisingly useful and applicable and puts what's happening today in perspective. So I highly recommend this if you have the time. And certainly I think it's going to be, I'm very happy to include it because it's going to be a resource to come back to so many times in the future. Then lastly, Daniel Akaye has gone through what's really going on in the US economy right now. As ever, he does a very accurate, I think, description of economic forces and what's really going on. So challenging markets, but there is a way to navigate through, and increasingly, I think real assets make sense if you can invest in a compounding framework. Then I think you can get through this well. So that's what we're talking about this week.